Alright, hey guys, welcome back to another live stream. My name is Josh. Today is the 31st of January, Tuesday. Thanks for joining in. Just wait for a few more people to join in. But today I had pasta for dinner, so that was interesting. Yeah, weather now, it's still raining outside. Clouds everywhere. Storm in New Zealand, so lots of areas affected in Auckland. Fortunately, we live in East Auckland, where it must be pretty elevated because there hasn't been much significant flooding over here. So yeah, it's been good so far, thankfully. But yeah, if you're affected, thoughts go out to you. Just wait for a little bit more so that more people will join in. Hey Tommy, how you doing? Good to see you here again. So I think for today's live stream, as always, it's Q&A, but there's a few things that maybe we can talk about. Sharese today increased their pricing, so there was an email that came out for most Sharese users saying that their pricing has gone up. Hey David, how you doing? Yeah, Tommy, I'm good, man. I haven't been too affected by the floods over here in Auckland, in East Auckland, so have been pretty fortunate. But yeah, people in the West Auckland and North Shore, some of them were affected. So definitely thinking about them. Yeah, it's an interesting one, like looking at Tower's announcement today. So we'll go through that today, Tower's announcement on the impact of these insurance claims. Tower's share price also came down quite a bit. Hey, Crypto Cash, good to see you from Lake Tahoe. Nice. Barely awake. Good to have you here, man. So yeah, over here is the Sharese update pricing. Already talked about a lot prior to this announcement. So made a video on that. I saw some people asking questions on the Sharese Facebook page about pricing increases and how that will affect them. So if you see some of them, link out the video. I know someone did. I gave them a heart react. But I made a video on this explaining how how each person would be affected depending on how much they invest in a particular stock. So if you see someone wanting help understanding, then definitely spread the good news. The Punjab Way, hey, how you doing, man? Good to see you here again. I have Solana and Phantom. How about you? So currently I hold Bitcoin and Ethereum. So those are the two that I only hold. I don't own any other altcoins at the moment. So mainly holding the majors. So yeah, let's go through that. So we talked plenty about Sharese's pricing already. Tower update over here. Oh, my face is blocking. Let me try to move my camera here. So Tower's announcement assessing the significant impact. Yeah, approximately 1,900 claims. And then I read another article this morning saying that the impact of the floods will be about 700 to 900 million New Zealand dollars. So the implications of that is that I think what's going to happen is the RBNZ might not increase the OCR as much as they wanted to. So previously banks were estimating the next hike in Feb to be 75 basis points. Last week the CPI for New Zealand came in at 7.2, which is below what the RBNZ was forecasting. Yeah, so Reserve Bank was expecting 7.5. Inflation came in at 7.2, so that's lower than what they expected. So banks were already forecasting 50 basis points increase, but with the massive floods and the cost on the economy, I think chances are that they'll definitely put a higher weighting on 50 basis points rather than 75 basis points. That's what happened when New Zealand went through the Kaikoura earthquakes. So Christchurch earthquakes, they actually cut interest rates. So perhaps we'll see them being a bit more dovish with the OCR. So I think that's the implications of that. CPI numbers over here, 7.2%. And overall, as expected, you would think, yeah, utilities up significantly, food up significantly, transport up. So yeah, nothing too unexpected there. And then we have the RUCs, the road user charges, coming back in again from today, I think, or tomorrow, so 1st of Feb. So that's sort of what's happening in New Zealand in terms of the macro front. Tommy, the whole retirement village sector has been rising a fair amount. Yep, that's right. It's actually nice. Oceania at 89 cents today. Really good. Unfortunately, I liquidated the Sharese's portfolio, I believe, at 82. So it would have gone up another 8%. Perhaps the outperformance of the portfolio would be quite significant if I just sold at the end of the month. It definitely would have been. Like, Oceania went up 8%. Somerset also went up. Some would have been, what would some be? Close to $10. Oh, sorry, it went down again. So 977. Ryman was the biggest gainer. Obviously, it was also the biggest seller, so not surprising that they've been the biggest gainer thus far, up 29%. So would have been good buying if you bought at the start of the year. Yeah, I think fears about interest rates continue to rise as fast as they have sort of died down, the fears of that. So seeing retirement village stocks coming back. We also have government now contributing more funding towards the pay parity for nurses in the industry, so that's helped sentiment a little bit, I believe. And I think borders are starting to reopen as well. So I've heard workers being able to just come into New Zealand without any wait lists compared to Australia where there is a wait list. So it does look like sentiment is changing. And also another contributing factor is that the whole industry was oversold to begin with. Like, if you look at, like, in a span of 2-3 months, It's down a third. So for a company that mainly comprises of property assets, that's quite unusual, right? So good amount of gains across the board there. The Punjab way, your comment, what is your full-time job? So yeah, I'm currently I've resigned, so I'll finish up my current role this Friday at a family office. So I do investment research there, and I'm going into a new role at Foodstuffs, the owners of, well, not the owners, the cooperative that operates New World and Pack and Save and Foursquare. So I'll be a commercial analyst there. So Giora, good to see you here. House insurance premiums are going to go up next year. Definitely agree with you. Yeah, fortunately we weren't affected. Like, I think East Auckland is somehow elevated, so that's been pretty good for us, I guess. 25 basis points would be nice. OC is the only company I own low, and a dollar cost average of 83 cents. Oh, very nice. So you're definitely up now. Yeah, Oceania has been like not a very good performer, and the market hates it now. Like just a year ago, the market loved it. At $1.50, the market loved it, and now market doesn't like it anymore. But we'll see how their care strategy executes. Like in the past 6 months, like their care strategy hasn't executed at all. Like we see cash flow go down when you know, I think people were banking on care delivering like cash flow, but cost of inflation, everything's just too high. So hopefully they turn things around. I still have Oceania is still my largest position in the private portfolio. I'm just checking right now. Yeah, Oceania is still like my largest position. It's under 20% allocation, but it's still my largest position. And then second is Somerset. So, yeah. One day I'd like Somerset to be larger than Oceania, but we'll have to, I'm waiting for the right price to switch between Oceania and Somerset. T, good to see you here, T. Did you see Jim Chanos commenting on how overvalued data centers are? Pretty big part of Infratil's plans. I didn't see that. Let's have a look. Jim Chanos data centers. This one here. I haven't seen this though, so I don't know. Well, I can't really comment too much on it, but data centers, yeah, have been like quite highly valued, like expensive. It has been expensive, so I'm not surprised to see that. Like if even like NXT on the ASX, next DC, their valuation multiples are like quite high, and I can't really understand it. Like they sell themselves as a growth stock, and yeah, EBITDA is like growing by 20%, but in terms of accounting profit, there's nothing. But then again, you could argue that because they're building up new properties, new equipment, that depreciation is always going to be high. So I believe that's what the market view of the company is. So like you look FY22 EBITDA is 169 million. That's cash flow from their eyes, I guess, their perspective. But there's not much accounting profit at all. Like underlying EBITDA up 26% to 169 million. Statutory loss of 9.1 million. So 2.4 billion of property. Capex is quite high. They're still building up new developments. And inflation well managed with revenue growth. So there's still going to be a lot of like cash flow going into building new equipment and then depreciating it significantly. And they're focusing on underlying EBITDA. But at the end of the day, I just see them as like, it's similar to like property stocks that eventually just reach maturity and then you'd collect cash flows. But right now there's not really like, perhaps you could call EBITDA cash flows. But yeah, I want to see like how much their maintenance cost would be to maintain these data centers, and ongoing capex requirements. So capex is coming down from last year. Let's have a look. Yeah, revenue up 18%, EBITDA up 26%. Yeah, strong CAGR over here. So I guess that's what's driving their valuation multiple, right? Significant growth in like revenue and EBITDA. So if you're looking at this from like a perspective of a REIT, for example, like if I'm investing in a REIT, I would look at how quickly their revenues are growing and how much of that translates to like free cash flow or funds from operations in the case of REITs, adjusted funds from operations. So they're using a different set of metrics here. They're using underlying EBITDA as their measure of cash flow. Yeah, but does the EBITDA to EV to EBITDA make sense? Yeah, my understanding is that it's still quite expensive. So what's next? DC's NXT. $4.5 billion valuation market cap, and EBITDA was how much? 169 million. So if we're just treating this as cash flow, it's still like pretty highly valued, right? 169, 4.52 billion. Yeah, so you're paying more than about 30 times EBITDA. And that's equity. So we should add in the debt to get the to get the enterprise value. So EV to EBITDA is quite a high multiple. So I can understand why someone would short it, but like then again, it's a high growth sector. Infratil spending a lot of money into it. Lots of like funds, big funds with long investment horizons. So like your big hedge funds, Blackstone, BlackRock, Vanguard. Well, not Vanguard, but Macquarie, Brookfield. They'll invest for like 10 plus years. So it's not surprising to see them pay high valuations because they can actually see the growth come through over the long term. Jim, yeah, I don't know what his thesis of shorting it is. Is it just valuations? The news broke. The sector was quick to mount a stellar defense against the notion that brick-and-mortar legacy data centers could lose ground to the cloud, the enemy, and not their business. Yeah, I'll have to listen to what his points are. Oh, that being said, there was an article on the Herald the other day, last week I believe, about data centers in New Zealand. There's actually quite a lot of them coming here. Amazon, Microsoft, and there's I think a Canadian one as well, or Sydney-based one. A lot of money is going into data centers in New Zealand, so it will add a lot of jobs. And I mean, they can't all be wrong, right? Like if you're trying to short, I don't know if he's shorting a particular like a particular stock or the entire sector, but like maybe they're all overvalued. I don't know, but like you assume that these big organizations know what they're doing. They could be wrong, you know, like Enron. People, you know, most people thought Enron was fine, but it turned out to be a big, massive fraud, with basically accounting fraud, that's caused Arthur Andersen, one of the big auditing firms, to go under. So things like that happen, like even FTX and stuff. Like I guess FTX was a bit more obvious, but it just caught everyone by surprise. The Punjab way, thanks for the comment. All the best with the new job. I gotta do my laundry now. Thanks for joining in. Project Frugal, good to see you here. G'day from Wainui. Hey, how's Wainui? Sun shining over there or not? In Auckland, sun's just gone down, but it's been really windy here. So I live in East Auckland, pretty windy. It's been cloudy for most of the past 5 days since Friday. But yeah, Next DC was actually a stock that I previously owned, but this was a while ago and didn't really do much research on it, to be honest. I just had a mate who had some Next DC stock, so I went in with him. But that was a very long time ago. It's like that's have been 2017, if that. $18 degrees. Not too bad. I think over here is like, I think it's about 22 here in Auckland. It's just really humid. Like I have my dehumidifier going on in the house, and I left it in my garage like on Friday on Saturday, when like the day after the huge rain, and it filled up within like 3 hours or so. It's just really humid right now. It's on CNBC YouTube from earlier today if you want to check it out. Yeah, I'll have a look after the live stream. I think that'll be a good one. John White, good to see you here. Are you still considering buying a house in Auckland after these bad weather events? Yeah, I mean, I'm planning to stay in Auckland, so probably have to buy, but definitely consider like areas where it's not a high risk of flooding. So this event is a good reminder, and perhaps these events will continue to happen. So unless we move cities or something, we can't really get away from it, right? So might as well find a house that's better suited to weather the storm, if you can say that. But fortunately, we're pretty lucky now. So in our rental, nothing really gone wrong. Didn't get anything flooded, but yeah, I know some people who have had their houses flooded. But yeah, it'll be interesting, eh? Like house premiums will probably go up, as Giro mentioned, insurance premiums. Perhaps even cars. I know a lot of cars got damaged. Like just videos of people driving through like a river. Or the buses, you see the buses, TikToks or videos, like basically going in the bus and up to the seats. You know how like the buses elevate on the back side? Like it was pretty much like almost there. Pretty hectic. But I mean, I think Auckland is still like pretty tame though. Like even in like Australia, there are floods. Like Queensland had a flood last year, I believe. So like Brisbane and perhaps Gold Coast. I think it was Brisbane mainly that had floods as well. So perhaps it's just a world climate change thing. Just checked Met service. Wainui is 21 degrees, muggy and overcast weather, okay-ish here. Yeah, same here, very muggy and overcast as well. NZX may have gone down today due to Auckland issues, perhaps. Perhaps. Like, what's the NZX doing today? Down 0.5%. I mean, that's too small of a percentage drop to associate with the Auckland issues. Excuse me. But perhaps that's more in line with what the Nasdaq is doing. Nasdaq went down 2%, S&P down 1.3%. I think that this probably has a bigger effect on the NZX than the issues with the weather in Auckland. If you think about the stocks that were potentially affected, Tower Insurance down, 8% over the past 5 days, down 7%. But it's a small cap stock, right? Like there's not much of a Tower waiting on the NZX 50 in the first place, so that wouldn't have affected the NZX 50. In fact, perhaps I think stocks that could potentially have a good benefit would be perhaps Mercury, because they have hydro in the North Island, so the more it rains, the more hydro capacity they have, the more money they earn from hydroelectricity. I'm not sure what the weather is like in the South Island, but Meridian would have a lot of South Island hydro, so if it rains in the South Island, then they generate more power and make more money there. But Auckland Airport, even though they've had issues with the terminal being shut up, it's up 0.59%. So it looks like they're shrugging it off. People are unfazed about that. And yeah, Fisher and Paykel up slightly, Meridian down slightly. So yeah, I don't think there's much of an effect on the NZX 50. Fletcher Building though, down 3%. That's interesting. Wonder what happened here. But shares have been on a tear lately. Yeah, not bad. John's comment here. Do you see global markets dropping again? I have seen a few people online predicting larger market drops like 2008 because of excessive debt levels globally, especially the USA devaluing their dollar. I don't know, but I did think that the recovery in the markets over the past month has been quite quick and quite swift, and I think a lot of people weren't expecting it, and based on the macro, it's understandable why people aren't expecting it. So do I see global markets dropping again? I do see it, but that's just my opinion. That's just what I think. It might not drop again. It depends how big of a drop as well. It could drop 5%, 10%, but will it drop 20%? I don't know. At the end of the day, no one really knows. They're just predicting stuff, and they might predict out of 10 times they might get one right, and if you see the one, then you think they're a genius. but no one really knows. So I do see it dropping again, but I don't know. Giora task has finally gone up a little today, but will probably go back down again soon. So what is task up to these days? Up to 39. Oh, up 11%. Very nice. Is there any reason why they went up today? Quarterly report. Are they making a profit? cash from operating activities of 0.5 million. Yeah, I've not followed it since Craig, the previous CEO, left. That's when I sold out my entire position in Plexure. And then the reverse takeover happened and haven't followed it since. So I'm not too across what the company does now, how it's performing. But they have a strong cash position, that's always good. Right, and operating activities positive, so that's also good. These are things you want to see with a company that was previously losing quite a lot of money. So the group is tracking to meet FY23 guidance, total revenue 59 to 62 million, adjusted EBITDA between 8.5 and 9.5 million. So that's not bad. I wonder how much of this is like task EBITDA though. Like if they split it between task and Plexure, like how much of this EBITDA is task EBITDA and how much of it is Plexure EBITDA. That would be quite interesting to see. Great content, thank you. thanks for that. Really appreciate it, Paolo. Thanks for joining in. So, yeah, that's pretty much what's been happening on the macro front. To reiterate, CPI 7.2%. RBNZ was expecting 7.5%. So that means they might not be as willing to increase rates by 75 basis points. There's a lot of like indicators now, a lot of confidence surveys showing that businesses are panicking about rate hikes. And then there's also like half of mortgages being re-rated in the next in this year, in the next 12 months. So a lot of pain there. And there was like articles about people having to sell their homes because they can't afford mortgage repayments on the Herald. So that also shows like what the mood is. Yeah, and I don't know if this could be the case, but if the current government wants to be re-elected, then they have to make sure that homeowners are happy, right? So they can't. RBNZ increasing by 75 basis points will put a lot of pressure on households, and when there's a lot of pressure on households, they might not be as willing to continue to vote for the current government. So there's also potentially like political influence there from the government to the RBNZ not to hike rates as much. But RBNZ is meant to be independent from the government. And then there's also the floods, which will put pressure on the economy. That will, I think, convince the RBNZ not to increase by 75 basis points, maybe 50, perhaps even 25. We don't know. Depends on the damage of these flood events. That's the macro view of New Zealand in a few minutes. Giora, probably most tasks they seem to be pushing. Yeah. I think the new CEO seems pretty across it, like even with the reverse takeover, you see his name like everywhere. And then Craig left, so I think he knew that Plexure wasn't performing and that they were interested in an acquisition. The acquisition turned out to be a takeover. I don't know. Just speculation here. always fun to speculate. We don't know. Yeah, but that's pretty much it. Not much else to cover. Yeah, if there's anything else, type them in the comment section. We'll answer them. Otherwise, we'll close the stream off early. It's really hot and humid here in my room, so I need to get some fresh air as well. Crojo here. Good to see you here. 1000 NZD of auto invest orders on Sharese's plan. Do you think auto invest is a good feature? Look, I think auto invest is a good feature if you are planning to use your entire quota. So for example, if you're on a $1,000 auto invest, so let's have a look here. I have this page open. So that's a $3 monthly plan. If you're investing $1,000, that's not too bad in terms of fees that you're paying, right? Like that's 0.3%. So that's lower than what you'd previously pay at 0.5%. So if you are monthly investing $1,000 and you know you're gonna buy $1,000 worth, then it actually works out better for you than before. But you do lose that flexibility with investing when you want to and however much you want to. But if your dollar cost averaging $1,000 a month, definitely $1,000 a month, then it's worthwhile. If not, then you're paying $3 not to invest anything. I think that would be a waste. Project Frugal, good to see you here. Appreciate the stream. Great to have a Q perspective. Thank you. Really appreciate it. Jeffrey, good to see you here. Hi Joshua, I'm a beginner and looking to invest $400 a month. What do you think is the best investment platform? So I think if you're investing $400 a month, are you buying individual stocks or are you going to buy ETFs? If you're buying ETFs, then you could look at like a platform like Invest Now. They don't have any fees for buying or selling ETFs. So $400 a month, that works with Invest Now. If you're looking to buy individual stocks, then Sharese for New Zealand stocks. Sharese is still like the best for New Zealand stocks, just because there's not much other competition for New Zealand stocks out there. So going with a $3 monthly plan allows you to buy $500 worth of stocks with your transaction fees covered. That could work, but in terms of the percentage fee, that's just below 1%, because you're paying $3 to invest $400. That is generally quite high. So it's just something to weigh up. Like you could pay a fee of $3 a month, or you could not pay a fee but only invest in ETF. So that's the trade-off, right? That's something that you'll need to consider. Sarah Yodum, hopefully I said that right. Thanks for joining in. Thanks for your question. What do you think the future of A2 Milk will be like? I don't know. I think they'll do well. I think so. Their recent efforts to rebrand in China seems to be working well. They have cleared out most of their old inventory stock, and they're relying less on Daigou. So I think it does make the current business more resilient than what it was at like $20-something, where they were relying heavily on Daigou. So yeah, I think they are on the path to recovery. That being said, though, there's a lot of competition in China. The government in China effectively like subsidizes the Chinese milk infant formula companies as well, so that the Chinese buy local. So understanding the competitive landscape in China is quite difficult when you're not there. Yeah. So, but I think they're on the right footing, and issues with Daigou hopefully won't come back again to bite them, because they've already gone through all that. They already cleared out their inventory issues, and they've rebranded in China. So it looks like the future is up. Crojo, my thinking as well, good to hear. And Project Frugal, I have a cunning plan for Sharese, save 5k, get the $15 plan. 5k buy, sell, and invest a lot. Cancel the plan, which is good for a month, and save up another 5k and do it again. Yeah, I was thinking of potentially that would be the case. If I stayed with Sharese, that's what I would do. But like, it means if you do want to like sell quickly, then it won't work, right? So if say you have a 25k portfolio, you want to liquidate everything, you have something to buy, say you want to buy a new car, you have to wait like 5 months to sell that because you're selling 5K each time, right? Using the $15 monthly plan. So there's some trade-off there. You lose a lot of flexibility, but hey, that could work if your portfolio is if there's not any urgency for you to take out that money, and if the portfolio is set and forget type investment portfolio, then that could work. And once you hit like above 25K, if you hit like 100K and your position sizing is like 10K each, then I mean that the new fee structure wouldn't hurt too much at all. So that's something that's something to consider. And I agree with that thinking. Krojo, I live in China. There are a lot of other A2 milk products with A2. That's good to hear. And other A2 brands from NZ that are packaged in China. Oh, that's interesting. So you probably know more about Chinese infant formula, the infant formula industry there than I do. But yeah, the reason why, like, I was talking to a colleague of mine. He was wondering like about the impacts of Daigo and why the English brand was more expensive than the Chinese brand, and people wouldn't buy the Chinese product but rather go through the Daigo to buy the English product. But yeah, I explained that people don't trust Chinese label products. So with the whole rebranding, I think it really improved the perception of their product in China. Thanks for the question. Longer term plan, looking at dividends long term. Yeah, another issue though is if you're investing for dividends long term, then you have to like reinvest those dividends at a high transaction fee, right? Like, I mean, the dividends that I get, a few hundred each time, for example, like if I were to invest that few hundred, it's a 1.9% fee, unless I save it up and then do that 5K thing, which could make sense as well. But it's quite sad that like Sharese hasn't brought out a dividend reinvestment plan, even though people have been asking for that plan like pretty much since when Sharese became a thing for buying New Zealand stocks. And you wonder why they haven't brought out this dividend reinvestment plan. And then you think about it and you realize, hey, that means like people have to buy the stock using their platform and have to pay them a fee. So there's obviously like an interest of Sharese to keep the current situation as it is. Because if they introduce a dividend reinvestment plan, then they're not gonna clip the fee again, right? So I guess that's also why like the other platforms haven't done it. Or maybe it's a logistical like brokerage issue thing across the board. I don't know. But if ASB can do it, I guess ASB and direct broking are CSNs, so you have a common security number, but Sharese doesn't. But then again, you can participate in like SPPs, shareholder purchase plans, or rights issue without a CSN. So I don't know. They're doing something. Arian, good to see you here, and thanks for the comment. To be honest, with all the fees involved with Sharese now, fixed deposits doesn't even sound bad. Lol, buy and forget. Yeah, I agree with you. Actually, fixed deposits, like Kiwi Bank 1 year is like 5-point-something%. Let's have a look, eh? Fixed. So 12 months, 5.3% ASB. Heartland Bank, 5.7%. And I think you can make it into a pie as well. So a pie being a portfolio investment entity, meaning that any distributions will be final tax. So it's more tax efficient if you're in that 33% bracket. So yeah, 5.7, 5.3, pretty attractive. at the moment. But Warren Buffett says when the interest rates are high, you should be investing in stocks, not in term deposits. So that's yeah. But I agree with you, man. Like, I have some money tied up in a money markets fund, a cash fund, and that's a pie entity, and the yield on that's about 4.8%, I believe. So that's more flexible than a term deposit, just because you can liquidate anytime, well, within a week, instead of holding it out for 12 months. So yeah, that's also something that perhaps might be helpful for others. I invest in the Kernel Wealth Cash Fund, Cash Plus Fund. So yeah, 4.8% as at 31st December 2022. So basically invests in like short-term deposits and company bonds and a lot of cash bank accounts as well. So that gives a much better rate than holding it in like, I don't know, ANZ, which just gives you like 3.4% on your savings plus account. Dividends will be part of our 5K saving up fund before getting the $15 plan. That makes sense. That's a good way to do it, I think. But yeah, I think we'll call it a night soon. If there's any last questions, leave them in the live chat. Otherwise, we'll call it a night. Yeah, pretty slow on the news front. I think, yeah, people must be getting busy with the flood and stuff in Auckland here. But it's good to see everyone on the live stream. But yeah, nothing much happening. I think global markets this week will be interesting. A lot of earnings coming out from US companies. I think Apple must be reporting soon, and Microsoft already reported. Yeah, 3 days till earnings, to Apple earnings. And I think that will set the tone for like the general market, because Apple is the biggest company and their sales will be indicative of consumer confidence. So that's something to think about. Last question from John. Have you considered Tiger Brokers for US investments? I haven't, because Tiger Brokers is slightly more expensive than Interactive Brokers. How it works is that Tiger Brokers actually use Interactive Brokers like underlying trading platform, and they slap a brand on it. So everything you're using is Interactive Brokers like software and platform. They're just slapping a brand over it, Tiger Brokers. So obviously Tiger Brokers has to make money somewhere. They're going to add the fees up a little bit. That's why Tiger Brokers fees are similar to like Interactive Brokers, but slightly more expensive. So in other words, like, I don't see why you should go with Tiger Brokers when you can go with Interactive Brokers. There could be some instances where it's cheaper with Tiger Brokers, but generally I think Interactive Brokers would be cheaper. So that's why I haven't really considered them. But yeah, thanks for joining in, everyone. Thanks, Bex, for tuning in. Giora, Sarah Yadom, and Krojo, thanks for joining in. Anyways, hopefully you guys aren't affected by the floods. If you are, please stay safe, and yeah, reach out if you do need help. But thank you all for joining in. Until next time, take care.